Everyone, I'm Uddhav, co-founder and CEO of Friktion Labs. One thing not many people know about me is that I'm a petroleum engineer by trade and used to work in the oil fields of South Texas and West Texas in both drilling and production engineering roles.
Welcome to Solana Insights. I'm your host Moo, and today we'll be chatting with Uddhav from Friktion. Friktion offers a full-stack portfolio management built to perform across market cycles. With Friktion, you can build a portfolio which generates returns in the bull, bear, and crab markets. Use volts to express directional views or passively allocate into neutral strategies. Welcome to the show, Uddhav.
Moo, excited to be here and chat with you.
What's up? What's up? Oh my, you mentioned like oil fields, like you're actually drilling like the black gold all like spluttering all over.
Yeah, so I spent my sophomore year summer in university working in West Texas, which has a couple of basins. So broadly think about it as a Permian Basin. Um, And I spent some time on a set of drilling rigs that the company I worked for used to run. And yep, they were drilling for mostly crude oil out there. I learned a lot about the process of how to set up a drilling program, how to design drill bits, and then how to optimize the drilling process, which is quite mathematical, but then it has a lot of art to it in how the driller sitting at control of the rig is actually kind of making decisions, and then the steerer, who's responsible for directing where the drill bit goes, can really optimize decisions based on a lot of information that they're getting fed to them in real time at the top of the rig.
Yo, that's crazy. You're the first like oil driller that I've come across. So were you able to go outside like to experience it itself, or mainly in the back end?
Yeah, so I was on the rig. So I mean, it was a
Oh,
10 foot walk away from. So I spent some of the summer on the rig and some of the summer in the office doing design and engineering. But I did get an awesome chance to kind of go around and learn how drilling operations work with like various types of rigs. All of this was onshore. Keep in mind.
okay.
But yeah, I was out there in the ropes with awesome crews that we had working there.
Damn, that's cool, man. So what was the most like, I don't know, like interesting fact you can share about with all
Yeah,
drilling?
something that most people don't think about when, I mean, obviously as a consumer of gasoline, let's say, which almost everyone is, you have to think about where it comes from. And one fun fact about when you're drilling is, and when we were drilling down vertically, call it 5 to 7 to 10,000 feet, and then we were turning the drill bit and the pipe almost 90 degrees and drilling horizontally for up to 2 miles. So that's a
You can
process that most
turn the
people don't
bit?
think about.
Damn.
So you have to design a curve, and that the designing that curve is one of the hardest parts about drilling. So you have to design that curve to safely steer through whatever unknown rocks and objects that are in the reservoir or in the wellbore
Oh
subsurface,
man.
and figure out how to make your way through that. And then once you drill it, you take out the drill bit and you have to put in pipe. So then you have to figure out how to fit these like 90-foot long giant metal tubes into this curve that you just built without breaking them. So it's really
Oh
fun.
god. Wait, but it's not like a strict like immediate 90 degrees, right? It's a gradual curve because I think
Yep.
yeah, go ahead.
There's a whole science in drilling called directional drilling,
Okay.
which is a group of people whose job it is to optimize the design and the drilling of the curve based on what they know about the rock and the formation, because it really does affect how you can do all these things and how you steer.
All right, so just really quickly, like, because the stuff you guys are using is like solid metal, right? So how does it curve?
Yeah, so everything has some stresses. Every metal has some stresses that it can handle. And generally, there's like two types of stresses, but we won't go into that. But there's a limit in which how much the pipe can be bent, and you have to work within those limits when you're like filling the hole,
Mm,
because all these pipes, as you said, you're drilling a very long curve, and it may not just be like a 2D curve, like just coming down and to the right. It may be going across like the z-axis,
oh
and
man,
doing very interesting things to ensure that the pipe can fit. So basically, you're drilling this long, drawn out curve in a way that makes sure that there's no risk to the structural integrity of the pipe.
that's crazy, man. Like all the pictures we see online or in our middle school books, it's just this big
Mhm.
thing coming from the top going straight down, but that's a lie, huh?
Yeah, it's actually funny because once drilling is done, there's only a tiny little a cap on the well that maybe is like 7 feet tall,
Okay.
and 1 foot diameter. That is what facilitates the movement of oil out of the well bore or out of the well into a pipe, which takes it to a refinery. So it's interesting how much we've evolved since the good old days of I think 1849 when we had the first oil well.
That's cool, man. Super excited to learn new knowledge in different markets. So that's a crazy change from like drilling on the oil fields to like crypto today. Um, yeah, tell us more about the transition.
Yeah, so I mean, as I was talking about, I was really into kind of the engineering, subsurface engineering,
Hmm.
and I got into the petroleum industry as obviously as a petroleum engineering major, and I thought hydrocarbons were quite interesting. Ended up liking geology a little bit, and kind of engineering broadly. So that got me really excited about this. And then as I was getting more into the things at school, I was fortunate to join this kind of computational finance group at the university, which was really comprised of like quant traders, researchers, market makers,
Right.
who all folks who graduated to do those things. And I thought it was a really cool ability to mix like a fundamental understanding of kind of supply and demand in the energy industry with trading background and learn a lot about trading. And that got me pretty excited and actually ended up being where I worked. So where I worked after graduation from college. So I after college I went to join a commodities trading firm in Chicago,
Mm,
and they were one of the largest physical traders in the world. So both a producer and a consumer of these hydrocarbons and like less carbon products. And since when I was there, we were focused on kind of the spot and futures markets, so cash and futures markets, and products ranging from crude oil to gasoline and its various blend components to biodiesel, which is a very interesting kind of environmentally friendly carbon product that's used to reduce the carbon intensity of diesel, which is the largest fuel for trucks in the world.
right.
So had a cool chance to experiment with a bunch of desks and really get into the weeds of like what does it mean to be trading a commodity. And I
Hmm.
mean, a lot of people think about some crypto assets as commodities, and I think it's a cool, somewhat translatable framework. But generally, I think being sitting on a trading desk is it gives a lot of good insight into like how markets work
Right.
on really every level. And then obviously sitting through flat price of oil going to like negative $37 in April of 2020
I was gonna ask
was
you about
really
that.
interesting. Yeah, that was just a really interesting time to
Yep.
be learning about the markets and um, just seeing how physical markets can really affect the price of the screen.
Yep.
And as that was largely a physical driven um, oversupply, which caused that. So
So that's crazy you mentioned the negative price. I was gonna ask you about that because I was right smack in the middle looking at that. I was like, damn, I've never bought like a futures contract for oil, but it's negative. I mean, like, come on, it's not gonna remain negative for long, right? Can I just like buy a barrel of oil and get it shipped to my house? Because that seems to be a constraint. And then I realized, damn, the minimum contract's not 1 barrel, it's like, I don't know, like 1,000 or something like that. Yeah. I was like, all right,
and it
cool.
also delivers at
Yeah.
like one place in Cushing, Oklahoma. So you would
Right.
have to have storage at that set of facilities, which
Okay.
was a large factor driving the negative prices. Places there were out of storage. So
Right. Right.
the tanks were full essentially, which means you have to incentivize people to empty their tanks and fill their oil and fill it with new oil coming
Yep.
from the screen. Um, and that was a phenomenon. I mean, we saw a couple of the other months in that. I think that was the May contract.
Mm,
I think we saw the next couple months having kind of some um, similar issues. Like they went negative as well, but this was purely kind of an oversupply and lack of storage
yep.
driven thing, as well as I think there's like market participants who probably weren't positioned to be able to handle that.
Mhm.
But for a physical trader, like we were, it was an interesting time because if you own a lot of tanks and spot is negative and there's a ton of contango in the curve, then
Yeah.
you can make a lot of
Making
money by filling up
yeah,
your tanks and
exactly.
holding by and being hedging by um, being short the futures against the physical that you own.
Yeah.
And basis that opens up basis, and basis is a product that we traded a lot there.
Man, crazy times. You spoke about commodities and crypto being commodities. That's a huge topic as well, circling at the SEC, like what's a security, what's not, and you kind of go under different bodies because of the different regulations. Any thoughts on what crypto should be, or is it right to have that distinction?
I think it's tricky with way different L1 tokens are designed. I think if we say broadly that all crypto assets should fall into one of these buckets, it'll be really challenging for a regulator to make that happen. But if we identify how does a network work, like the Bitcoin network works a lot differently than the Ethereum network, right? Proof of work is different than proof of stake, and it just fundamentally you can treat these things as sometimes different assets. But we've seen so many different like mental models used in the past, or even just like financial models used to try to understand if it's a commodity, if it's a currency, um, if it should trade like a bond, even around kind of the idea that this ETH will be redeemable for an ETH once the merge happens. I think there was a lot of confusion around that, and there will be because there's no good answer. I think the answer is really going to be in the eyes of regulators, and as a kind of taker of regulation, not a maker. I think I'm just optimistic for them to get to a view and like a solid view. I mean, we saw some clarification
regulation.
about BTC and ETH being commodities,
Right.
at least being classified as that, and
So
moved over to CFTC.
how would you classify Sol?
Sol's an interesting one. I mean, it doesn't have the properties of Bitcoin. I personally don't think I could classify it with any legitimacy, uh, fortunately. But I would reckon it falls under the latter,
Commodity?
in the same way ETH does.
So security.
I'm not sure. I don't think we actually have
No definition yet. All right.
a definition for that yet. I
Yeah.
actually
All
don't
right. We'll
provide
find
much
out.
advice in this area.
Yeah, we'll find out when it comes, man. But I fully agree. I think regulation is something that, even though a lot of people don't like, I think it's good for the space in that it brings legitimacy in. There's a way to, um, govern the space. There's a framework around it. And I think a lot of normies or people without any crypto holdings, they're scared because if there's no regulations, they feel like it's a very unsafe space. And rightly so, right? Crypto has a bunch of rugs or different people, just doing cash grabs. There's hacks all over the place. Even the most secure things, they get into trouble as well. And recently, there's this whole like social engineering or like going through different discords, different Twitters. I know PAYC they got hacked. There was like Duppies. Then there was uh, this new degen mint thing, and it's awful, right? So I think regulation needs to come in. And that's where we will start to see real adoption. Right now, it's filled with a lot of enthusiastic early adopters, but I don't think we'll see the second half come in until regulation is in place.
I think it's been challenging for retail users of crypto or DeFi specifically in the last, or just generally like CeFi has faced problems. DeFi has faced problems,
Oh yeah.
which makes it more challenging but more rewarding. I think for people like us who are trying to build things that
Mhm.
are fully transparent, easy to understand, and don't really always rely on having siloed information like
Yeah,
a lot of centralized yield platforms do.
exactly. All right. So you mentioned that, okay, so going back to your original story, you started in oil fields, you came to like, the trading desk with derivatives and oil market. How did that eventually go from Web 2, I would assume, to Web 3?
Yeah, I was never super into. I had a lot of friends who were into like kind of classic Web 2 SaaS startup, or into building something like a like fintech, health tech type things. So I think for me it was mostly from the trading angle. I think Web3 is kind of a meme term. It's really tough to actually explain to someone when they ask you what Web3
Mhm.
means. I think what really got me excited was DeFi. So I probably like 6 months before DeFi summer, had a lot of friends who were getting like really into the weeds. I mean, they were like Ethereum developers, working on
Mm,
various ecosystems, and they got me pretty excited about the concept of DeFi. And while working in a trading role, I saw a lot of these things as really just what they are, which is a lot of inflationary sources of return and yield, as things are called in crypto
yeah.
or in DeFi.
Yeah.
And I wanted to understand where it comes from, and then I got pretty enamored with the concept of automated market makers, specifically um, um, concept product market makers. And I thought that the idea was very interesting to bootstrap liquidity, because that is traditionally the function of a market maker in any normal market, right? And I'm
Yeah.
sure Durden talked about this when he was explaining Cliffinity,
Oh
but
yeah.
I think that's a novel innovation that we've seen, and we haven't seen too many innovations on that scale in DeFi. So the concept of impermanent loss, which is a meme term as well, it's really like opportunity cost. Um, it it's something that is very hedgeable, but
Hmm.
and I spent a lot of time trying to do that when we started, was like figure out how to get sort of options to be able to hedge IL and do this with OTC market makers, OTC traders. And I realized through that process that there's actually just a raw demand for risk management on chain. By this, I don't mean like a span margining across a bunch of various venues. I just mean simple, like when you create a portfolio at any kind of centralized financial product or service,
Hmm.
you can see a lot more into the performance and risk of your assets. And I just didn't see that existing in DeFi. Even through DeFi summer, I mean, it was a summer that was driven by inflation, right?
Yep.
Like in token emissions,
Yep.
and it grew the communities and it bootstrapped a lot of new users coming to DeFi because, I mean, printing money is always exciting, right? Whatever you do, whether you do as a
Until
government or
it
as a
stopped.
protocol,
Yeah.
and then as it stops, like people who stick around, and then you have this giant issue of what does it mean to have mercenary capital in DeFi?
Yep.
And I think our approach that we've taken from the beginning is like we don't people, like a lot of protocols now to bootstrap liquidity are just paying institutions in their native token to deploy capital into their project,
Yep.
while and that capital is only going to last for less than a year, right? And that's something traditionally you would see done with the normal liquidity mining program. But I think
Yep.
as an emergence of these kind of like Web 2 teams into crypto happens, it's a problem that we'll see grow.
Man, bro, you're speaking my language, dude. All those keywords like mercenary money is a huge problem. You have this money printing that like you still have to deal with it after, right? Because what are these mercenaries going to do? They're going to dump your token. So all these are really really good topics. I think even people today, even those people that's gone through DeFi summer or DeFi 1.0, and then there's 2.0 with the whole like Olympus DAO thing. Most people still don't like understand like if you have a pie and you cut it four ways and you own a slice, you own a quarter. But if you keep cutting the pie, i.e., you keep emitting more tokens, you may have more tokens now, and you may have like 10 slices, but it's still one quarter. People don't understand that basic math. Like, as you currently pointed out, like value has to come from somewhere. And if I always tell people, if you don't know where the money's coming from, it's coming from you. Like that's the
Yeah.
hard truth.
I think DeFi brought up just generally the concept of token emissions is really what you do to acquire new users. The question is
Yes,
how long do they stay? I actually think it's
correct.
a powerful metric because it puts ownership in the hands of the real product users, which is different, right? In the traditional world, like let's say you start some like fintech company, what you're probably doing is taking capital that you raised from an investor and passing that to a user by giving them some sort of rebate or discount on the
It's
product,
a
or here's five
correct.
dollars to start using the platform. This is a
Exactly.
different way to do it because it's using supply that has been predetermined to be allocated for inflation.
Hmm.
And I mean, to be honest, like every L1 token also does this too, right? Like we secure the Solana network by
For
holding Sol, and
emissions.
in return for securing it, we get more.
Yep. But there's the core difference, Udav. The core difference is in your traditional model, if you may, if I'm buying a user to onboard, that's just an acquisition cost. I can roughly estimate what is my basket, meaning like how much the user will be spending, what's my return on the user, and there may or may not be a financial like um, trade-off there. Like it makes sense, right? So for example, I'm my acquisition cost maybe five, the user gives me back 50. That's great. So that's one difference. The other difference is the user actually knows that I'm a consumer. The user goes, all right, I'm here on this like ice cream app and I'm happy to buy an ice cream for $10 and I don't expect my ice cream to go to 50, but it doesn't work that way in DeFi or even NFTs. People are buying tokens with the expectation that it goes up. So they think they're an investor, but in reality, they're the customer, which is why I said if you don't know where the money's coming from, it's coming from you. And what's breaking DeFi, in my opinion, is the lack of genuine customers.
I agree. I think and the solution to this, in my opinion, is just make risk really clear and
Yeah.
make it obvious what people need, because the concept of portfolio management is something that I don't think DeFi has grasped yet. And I kind of view it as our mandate. And we were talking about this a little bit earlier, the concept of Friction Learn and an education
Hmm.
platform to bring the masses into DeFi. I view it as a mandate of a protocol, a DeFi protocol that is trying to build a solution that just survives in any market cycle. That users have to think about their assets, what they hold, from both the return perspective, which is what's glaringly obvious across a lot of DeFi today, and the risk perspective. So, what's the downside of using a yield farm or yield farming into a concert product AMM versus in Lifinity or depositing into Lifinity versus
Hmm.
lending capital on a money market? And I think once we level up the average intelligence of a DeFi user, it unlocks a ton of potential for products that not necessarily are more complicated, but also really are just different and diversifying. And that's kind of how we view our mandate as Friction as well.
Hmm. Fantastic. I mean, like the way you put it, we need to level up the education of the DeFi users. I fully agree. I mean, that's the point of this podcast as well, right? So we're working hand in hand to do that. So everyone who's learning
Yeah,
and listening, fantastic. So all right, cool. So moving on with your story, you finally moved into, you saw people in the ETH side developing things. You're finally in Solana. Um,
Yeah,
how did
before
it
this, I
start?
worked a little bit at Rari Capital, which was a isolated money market
Hmm.
on Ethereum. It was acquired by Tribe last year, and some interesting things going on there right now, of course. But had a chance to kind of learn about how teams work and how teams are built
Okay.
in DeFi, especially from like a really sharp and fast moving group of young people. Um, So that was a pretty important experience for me in deciding I wanted to kind of do this full time and really dedicate next bunch of years to this.
And how do you begin? Like, did you have like capital from VCs waiting to back you up? Was it like a Solana hackathon? Like, how did it start?
Yeah, so I mean, initially it was this IL hedging stuff that I was talking a lot about with Alex, and he and I, and then we realized like there's an opportunity to do this Solana hackathon called Ignition, which was last October, and fortunately we got some prizes in the hackathon, so we're invited to
Nice.
Breakpoint, which is a Solana conference in November in Lisbon, Portugal, and when we went there, we really saw how fast the ecosystem was growing,
Yeah.
and we found that there was a really big space for really just quality portfolio management, and
Mm,
decided that we at that time Alex had recently left a job as a quant trader, or he was about to start a full time job as a quant trader in New York, and we decided that this was a good time to um, come together and build something. And then we found Jason through Discord and started to grow the team. And then after the hackathon, and launching our DevNet product. So we launched our product to DevNet for as part of the hackathon, which I think for some reason is no longer a standard, but I think it should still be if anyone's submitting anything to future Solana hackathons. Definitely like have something working in prod,
mm,
um, at least on DevNet. But once we did that, a couple of weeks later, we raised some money for our seed round, led by Jump and a couple other investors,
okay.
um, to really bootstrap the next kind of year ish of growth.
Mm,
And we did that primarily just because we wanted to grow the team to a size where I mean we're still like very lean. I think we're about 9 people now, and we just brought on 2 people, 3 people in the last month and a half.
okay.
So all mostly on the engineering side. Um, so we try to keep we want to keep the team lean and very fast shipping. I mean, if you notice, we really want to. We don't do as much like empty marketing and stuff. We focus on just shipping useful volts and products that people can use to diversify their portfolios.
Mm,
That's been our goal for a while. So,
okay. So, do you guys have an office? Is it all like remote work?
oh, good question. Yeah, so 4 of us live together in
Oh,
Texas
wow.
in the same
Okay.
house. Yeah,
Cool.
so we work downstairs and we live upstairs.
You
And
guys are like
yeah,
the actual co-living.
yeah, I think it makes shipping a lot easier. It has a lot of benefits to teams that are looking to get things into market fast, especially because all of us have grown quite close. Like we're really good friends as well, which makes it awesome and really fun to to live and work together.
That's that's one of the beauties, man. So like I have my own team as well, and I think one of the greatest joy is to be able to work with your friends. And again, because you're working like round the
Yeah,
clock, you spend a lot of time. It's a very nice side benefit to be able to just grow deeper and more meaningful relationships. So that's awesome, man.
It's been so much fun, and we have as we grow our team. I mean, we have people in Singapore, Argentina, and now Europe, and across the team as well. So it's like everyone has a kind of headquarters. We kind of have headquarters, but it's still quite distributed for the rest of the team. So it's cool to see it grow.
So you're across
There you
3
go.
different time zones. You don't sleep.
Yeah, that's one thing. My sleep hours are like kind of non-existent, but I think it's totally worth it for the next a couple of years to grind it out and build kind of the best DeFi product out there.
Exactly. Right on, man. All right. So what I wanted to ask you as the main topic actually is I saw this tech tree almost like from Rooter. He posted it. It's like a StarCraft tech tree. So StarCraft is like an RTS game. It's like and then there's like a huge shout out to gamers. I love StarCraft. Uh, and it was like a tech tree of like, oh, layer like level 1 is like Serum, and then after Serum there was like Zeta, and after Zeta came Friktion. Like that's crazy. Like people are building on top and on top of each other. So this is like this huge, topic of
Yeah, just to be
composability.
clear, we don't actually use Zeta. We use Serum.
Oh, okay.
But
There's
yeah, I think that tech tree is a little bit skewed towards Solend, or like I mean it's considered. I read it as like we were wanting to make a tree of things that are related to Solend.
okay.
But I think it's yeah. I mean things built on top of. There's a lot of composability in Solana. I think it has shown that there's a lot of utility to it, but it's also kind of a meme to many senses. Like it sounds really cool, but when you get down into it, like posing on different things that other people write is not always easy because it requires them to have like the same vision and idea of what the product needs to be in order for you to use it. That makes sense?
Yeah. So the big debate, the big debate is this, right? Do you think that it's dangerous for teams to keep building on top of each other? Because I mean, you spoke about having the same vision. That's one thing, but what happens if like something, fails down the line? Like,
I actually don't think that's like an existential risk. I think that's actually like that's a point of security in open source is if people build on top. Let's say Compound for example, right? Because everyone has used Compound. I mean, Rara used Compound, and the core code base that everyone uses should have the most security, and it should provide the most transparency into the operations of that protocol. And as that hardens, I view that as like adding safety to the ecosystem actually, because if everyone can trust the same lending borrowing platform, or rather than trust, I mean, if you don't have to trust any underlying platform because it's so widely used, I think it hardens the system, but it also, as you said, like just if everyone's using the same thing, then it has like more risk on. But I think the same way kind of blockchains generally work, right? It's like you need more people to validate and prove transactions true in order for the system to be secure. So,
I mean, like my question is not so much in security because I think, you have this open source things and the codes are fairly secure. What I'm more concerned about is going back, I guess, to the basic concept of decentralization, where you have Bitcoin that's being powered by all these different miners, right? So if any one miner goes down, you're still good. In this case, like if let's say I build on top of Friktion. Friktion is run by you guys, and if somehow your server goes down tomorrow, then I'm pretty much screwed, right? I can't do anything.
you mean the RPC?
RPC, yeah.
Yeah, I mean you can just use your own RPC or just find another RPC and just change the one. Like let's say our RPC provider has issues. You can always change. Pretty easy to. Generally, I think you just like go to the top right and click on network. And
What if
paste
you
your
like?
own
But what if
RPC.
you yank all the codes and I can't use that anymore? And
As in the
program-
front end?
Yeah, like you yank the program out, I can't use it anymore. The Git is closed.
I mean, that's always a risk of like if no one has any code, but like you could try to deserialize a program and figure out what's actually happening. But I mean, yeah, no, we obviously wouldn't. There's no incentive for us to do that. But I think the question is like if the front end wasn't hosted by someone, and I think on that question, front ends need to become more decentralized in the future so that anyone can run their own version and access the protocol through it. because technically the whole like Friktion just broadly is just giving users the UI is just giving users access to some programs, and anyone can spin up their own UI to do that. There's a really easily accessible SDK that we have out there, and Rust API. So if anyone wants to spin up their own front end, we're happy to help facilitate that to decentralize the ownership of that as much as we can.
So if we go down the whole tech tree thing, what do you think is going to be built on top of Friktion?
Yeah, I think the concept of portfolio management with vaults is something that we've seen pop up recently. So if you look at invest in, and there's a couple of things left off on there that I think this definitely deserve to be noted. So Sol Farm, Tulip, probably one of the more exciting like lending yield aggregation platforms on Solana because it doesn't really exist on other like the type of opportunities that they offer don't exist really on other chains. So one really interesting thing we've done with those guys is, or with TS USDC, which is the Tulip Strategy Vault USDC. So what it does is it lends USDC across a variety of lending platforms, both ones in Solfarm or Tulip and through Solend and Mango, and it optimizes for the best rate while trying to minimize risk of over-reliance on one pool, or in situations where like withdrawals are just paused because of like what we saw in Solana recently. I think it was one of the few protocols to not have an allocation into Solana at that time. I think it offers a very interesting idea of kind of what you see with Yearn with YVUSDC. And we think that's super powerful. And we thought that so much that we decided to deploy a strategy on Friktion where users can just deposit TS USDC, which is a yield-bearing USDC. You can earn, right now I think you can earn between like 3 and 5% from lending that into on Tulip Strategy Vault. And you can use that to deposit into Friktion's put selling strategy, Vault number 2. And that adds whatever the lending yield is from what you can earn from just selling put vol or selling puts on the second vault. And actually, we're going to announce, I don't know whenever the podcast will drop, but it'll also have a very important role in our 5th vault, which will be launching actually tomorrow, or announcing tomorrow, which will allow for the first time like a capital protection strategy in DeFi. So long volatility plus earning a fixed income type interest, in this case, a variable interest rate.
Cool. Just for the people who are not familiar with options, I went on your site. I have some options background, so it's not too bad for me, but I try to ask people who had no options background and they were very, very lost. So you have 4 different
we have a
vaults, right?
whole redesign coming soon, which should make it a lot easier for people to understand the strategies. There's actually a video on the calls on Vault 1 where you can see exactly how the Vault works.
Cool. So for people who don't know much and all they know is, I think it's going to be a bull market or a bear market or it's going to go sideways. What vault does what? I think it's going to be a bear market. I'm really scared. Recession's coming up. What should I be going for?
Yeah. So obviously none of this is like advice, financial advice, but I want to run through the vaults. So there's 4 vaults right now. The first one is this first one strategy. It's called Generate Income. The strategy is selling covered calls. So this is best in kind of mildly bullish to bearish markets, and it's oftentimes, as we're seeing in today's market, it is really the highest source of not inflationary return or yield in crypto. So you're selling upside volatility in return for a premium, an option premium, and this strategy for Sol, for example, has generated 15% return, around 50% return in the kind of first half of the year, which has generally probably been the highest form of highest place for real returns in DeFi. And obviously, this is a bear market strategy, so it's quite useful for people who are looking to stack Sol, or even just looking to earn something on top of their Sol or MSol, or really any crypto asset. We support like 20 assets in there. So
okay, so I'm going to pause you right there to break it down for the listeners. When Uddhav mentioned non-inflationary returns, that's because a lot of our assets today are inflationary. So anything that you stake, that's just producing or printing more, and that revenue is unsustainable, right? There is trade-offs to that. When you invest in the vault, what you're doing is people are basically betting that Sol doesn't go too high. It can go up to a certain point. but doesn't go too high. So you're kind of giving up that upside. Your upside is almost capped. So if you're okay with that, and you're okay with earning 15% and having an upside capped, that's where your money really comes from. People are willing to take that bet. Am I
Yeah, and to
accurate
put
there?
some numbers to it, yeah, I think that was a solid kind of description. To put some numbers to it, let's say this week you were selling Sol call, or you deposited Sol in here, and what was happening is you're selling the call, so you're betting that Sol doesn't go up 30% during the week,
Mhm.
and in return for making that bet, you receive an option premium, and on average, the option premium is between 20, it annualizes to between 20 and 50%, depending on where you, so within each volt, we have low voltage and high voltage. Um, and it's pretty impressive because like the high voltage is betting on a lower, a move that's, let's say low voltage is selling a $49 call, high voltage is selling a $46 call. So it's taking a little bit more risk in return for a much higher return. So, for example, that one has like a 42% APY right now
Yep.
versus the normal volt, which is around 30%.
So would this work best in a bear market actually, or a flat market?
Yeah, this works great in flat markets, as long as, well, in flat markets actually vol tends to just to fall, which makes the options quite cheap. In bear markets, when there's still some potential for like upside rallies, I think this is a better place to park capital. Personally, I think it's easier to get returns from this than it is from kind of yield farming, especially because all your emissions are going to zero faster than they were in a bull market.
Hmm.
So you have to be the first one to dump the emission in order to realize profit in dollar terms.
So very quickly, the second and third and fourth vote, like bull, bear, crab.
Exactly. Yeah, I like to think about it that way. So the first one is kind of good for bear. Second one is good for bull. And the second one is like we're talking about. This is selling upside.
Hmm.
Second one is selling downside.
Hmm.
So if you think we bottomed on Sol here, then you're likely a seller of puts, or you're a user of Volt 2. Then
Okay.
the third strategy, which does that make sense?
Yeah, perfect.
Yeah. I'm really excited for like the next kind of ego of strategies that are coming. I mean, the third strategy uses this thing called a power perp, which essentially, if you trade perps normally, you know that you're just taking exposure to the mark price minus the index price.
Yep.
Mark being from the order book that you're trading on, or the VAM you're trading on. Index being from an oracle or an index of spot prices from various exchanges. Essentially, instead of trading Bitcoin perp, you can now trade Bitcoin squared perp on entropy.trade, which is a Mango fork DEX that we launched just to add power perps. Um, and the Volt 3 runs the crab strategy on there on a weekly basis. So if you think markets are range bound and kind of crab around, that's a really popular one. And I think
Nice.
the capacity increases are coming very soon. So keep an eye out for that for the next couple days.
Cool. And four?
Or is a basis strategy. So for people who trade perps, also probably familiar that there's a concept of funding rate in crypto, and the funding rate. Actually, we have a really good article on like how do perps work. I can drop a link to you. Just drop a link in the chat so I don't forget later. This lets you really take exposure to funding rates, right? And funding rates are essentially a mechanism which helps the market price the perpetual contract to converge to the price of the underlying asset. And to expand that further, if the perp price is greater than the underlying price, then funding rate is positive. The longs are paying the shorts, and if perp price is below the underlying price, then funding is negative. So shorts are paying longs. Currently, the basis strategy is long basis, so it's making money in negative funding environments. And I mean, we saw structurally Mango is quite a negative funding environment since the demand, most of the OI, 90% of the open interest comes from UXD, which is a algo stable that runs a short basis position. So you can monetize or you can arb the basis yourself by just using the strategy.
So bull, bear, flat.
Bull, bear, crab, and then market neutral. Obviously taking on
Neutral.
basis risk, which is obviously important for every trader to know. But
All right, cool, man. So just to recap for the listeners, I know it sounds super technical, but what you really just need to take away is if you're doing a usual position. Let's say, you think Solana is going to go up, then you could easily just buy Solana. If you think Solana's go down, you can either short, or if you don't want to do anything, you can take your money off the table, keep them in stables. What options or what these vault strategies allow you to do is that you can consistently make money with these strategies. It's just a matter of upside trade-off, so the maximum. So for example, if you're just going long, you think Solana is going to go up, right? In the usual purchasing of Solana, your upside is infinite. It'll keep climbing so long as Solana goes up. If Solana keeps going higher, you make more money. But if Solana does nothing or Solana goes down, then you're in trouble. So your exposure is with the other direction. Whereas for options or defaults, you basically constantly make money in trade-off for these extreme swings. So these are just different ways in which you can make money in the market. Did I get that roughly right, Uddhav?
I think I put it well. I mean, everything in the markets is a risk taking mechanism, and it's always important to know when taking on a position what risks you wear with that. And if you understand those risks, then you're in a great place. And don't use anything in DeFi without understanding the risks. Sure.
So always trade with money you can afford to lose and understand that there is risk in all your plays. All right, Uddhav, a lot of cool stuff, technical stuff, a lot about Friktion. I'm going to ask you a bit more personal questions now. I'm super interested in your co-living situation. You have 4 people living together. How do you guys cook? How do you guys eat? Like, is there like a helper coming through? Do you guys just like order food in every day? Like, what's up?
Yeah, decent mix of like going out and getting food, ordering food, making food, and then yeah, fortunately, we're all like not super messy,
Nice.
so it's not that hard. But like yeah, it does get dirty at times. So
What
we're
happens when it's
fortunate to have
dirty?
it's fortunate to have someone to come help us clean.
Yeah.
That just changes the game. Every Thursday, we're all excited to look forward to a clean house.
Oh man, do you guys have to take the trash out, or does that
But
happen
yeah,
once
of
a week?
course.
Okay.
Yeah, of course. Yeah, we that's our big. Actually, I think one of our teammates just realized that someone takes the trash out every week, which is usually me. But
Uh,
it's funny
uh-oh.
to we're trying to get chores. We're trying to get like a chore schedule down. It's just gonna be really hard.
Okay.
Yeah.
And everyone does their own laundry, right? Like the Thursday helpers that
But
do
yeah.
it. Okay. Man.
Everyone mostly takes care. I mean, we all have our own rooms. Um,
And, and
and
and and do you have plans to
uh,
expand this to like the entire team if they wanted to?
and I think we're gonna have once we get to like 12 or 15 people, we're
Mm,
gonna have a really awesome offsite together. Our first one as a team,
nice.
and I think it's gonna be really exciting. I'm not exactly sure where it'll be, but Austin would be a cool place.
All right. And question for everyone who is always curious about females: is there any females in your team?
One right now, soon to be two.
All right, right on. I think we need a lot more balance in this crypto Web3 space. Um, cool, man. What's the most embarrassing thing you've done in your life?
Oh man, that's an interesting question. Um, I don't know a good answer to this. I
All
can
right,
think of
maybe
many.
what's your worst trade that you've ever done in crypto?
Oh, okay, yeah, I think well, one of them was not selling all my Luna early. I
Oh
think
man.
that was one of them.
Yeah, bro.
I unfortunately
Luna.
like I didn't have much risk on the table, but I definitely like was not ready to part with my Luna when they
Well,
decided to
you
depeg.
still have your Luna. It's just not worth a lot more. But you still have your Luna.
I mean, I dumped it as it was going, but I still wore a little bit that I just had in a place that I couldn't access. So,
Right, right. What was your dump price, if you don't mind me asking?
oh man, let me see. It was
Was it
not. It
in
was
the
like not
dollars?
that bad. It was like
Okay.
$40 or something.
Oh, you got out good, bro. Like, damn.
No, I was like just trying to chase Luna all the way till back in the day, like it hit like $100 at some point. I remember when it was at $100, I was like, wow, this is a great 10x.
Luna nuked my entire portfolio because I had a lot of exposure with LPs. So even my Solana bag got hit because I was pairing with UST, my USDC UST, and that got nuked so hard. RIP my bag. So I think all of us are nerds to some degree in the Web3 space. What is something that you can gush about forever?
Ooh, in terms of topics,
Yeah, like I love gaming, so that's mine.
um, I think. Let me think of a good one. A lot of things. One being friction, of course, as I've talked a lot about so far on the podcast. Another thing is just like how many base things DeFi gives access to that you wouldn't expect as like a non-DeFi user. Like when I talk to friends who aren't into crypto,
Mm,
but are generally knowledgeable about software, they tend to be really surprised at the amount of things that you can do with just like a wallet,
yeah.
and how much that unlocks. I'm really excited to see the wallet space in particular. I mean, not a builder in the wallet space,
Mm,
but obviously an active user, and we're as a protocol, Friction's going to be integrated into a couple of the leading wallets on Solana here pretty soon. Had a couple of posts coming out about that this last week, which is
nice.
awesome. I think wallets are like the largest distribution mechanism for DeFi today. Um, I think uh, it'll be more important as we go forward. I think even the use cases for like institutional users coming to crypto still need to
Mm,
find a way to use a wallet, and they may not actually be clicking and doing these transactions. It may all happen through some sort of SDK or some API. I think wallets are pretty exciting. I think innovating on wallet UX is something that Unstoppable, Slope, Phantom, or Ultimate Fine, Ultimate now, Ultimate Money is the new wallet name for Unstoppable. And I think these guys are doing something really cool to make entire DeFi experience, entire Web3 experience in one app,
mm,
which makes a lot of sense to me as a consumer, because it's challenging to manage your positions across 10 different venues. Your liquidity providing on Orca, you have some positions in Volts on Friction, you're swapping on Jupe, and or you're lending on Soul Farm, Tulip, and you're trading Purpose on Mango. So balancing all these things in one place is really challenging. And I
yeah,
think there's a lot of need for consolidation there.
I fully agree. I would tell you straight up that I probably forgot like more than half of where my money went because I've been experimenting with so many different protocols. So it'll be awesome to get and the dashboards. I know there's some dashboards in Solana. They don't even like show everything, so that's a problem. So yeah, fully agree. We should get
I mean,
everything.
Step and Sonar are pretty good with
Not
showing
everything.
things.
Like Stephen doesn't even like show my radium positions now for some strange reason. So yeah.
I mean, I'll ping the Step guys about that, but they're usually really fast. They have a Hello Next, or not Hello Next. I think yeah, maybe it's called Hello Next. It's like a
Mm.
any board, which just allows users to make recommendations on like products or features, and they're usually quick to ship. I'll ping about that, see if they can. That Step you said, right?
Step. Yeah. Right. And how does your family feel about you being in Web3?
Oh man, I think they were confused at first. Still don't think they fully understand it, but I think
You've
starting to.
explained it to
Like,
them? Like they understand it?
I've we've tried at a lot of dinners, and had a lot of conversations about it as I was getting super into it. Um,
Okay.
and I think it's been really fun to try to get them interested and excited about it. I think and my dad's almost ready to be a user of Friction. Not sure how long
Nice.
we get
So
there, but I think we're getting closer every day.
does he have a wallet yet?
He does, yeah. I set him up with a ledger and um, showed him how to use it. And same with my mom. My brother's already pretty good.
Right on. That's how you know you've made it when your dad has a wallet and he's starting to trade. That's you've made it, bro. All right.
That's the goal.
That's the goal. And this is more a philosophical question. Are you happy today?
Yeah, I think I'm super happy today. I think there's nothing else that I'd rather be doing than what I'm doing today. I think I've been super fortunate to have a really kick-ass team and awesome community who's helped us grow everything to where we're at. I mean, I think a lot of my life is consumed by Friction and for the better. So
Hmm.
I think I'm super happy. I'm optimistic about the future, but I think there's a lot of challenges we have to be realistic about in crypto,
Sure.
especially as uh, there's just so many things going on in different ecosystems that people may be scared or nervous about using Fi. And the labels that come out of centralized finance to a lot of these things make it trickier for adoption.
Yep. I'm happy for you. I'm excited for what DeFi has to give us in the next few years, and I'm excited to follow Friction's journey. So before we end, I usually have this section called Rapid Fire. It's basically me just spitting out random words and you giving a single sentence response. So it should be super fast. Don't think it through too much. Just like a one-liner
Do
response.
it.
We keep going and going.
Good.
All right, ready?
Do it.
Solana summer.
Started.
Mm. Plant-based diets.
Optimistically bullish. It's hard to do. I have a lot of vegetarian people, friends, and family in my life, so I think I respect it.
All right. DAOs.
Ambitious, but productive when done correctly.
Tea. Like coffee and tea. Tea.
Big fan of green tea and oolong. I try a lot of teas, jasmine as well. I'm a big tea guy, so I used to carry around a bunch of tea bags every time I traveled everywhere because I was obsessed with this one brand that I had found in Texas. But yeah, I love tea and coffee too.
All right. Lambos.
Lambos?
Lambos.
Not like my favorite nice car. A bit too flashy for my taste. But they're fast.
ETH 2.0.
And
Oh man, whales.
necessary ecosystem creators. But too many whales can result in over centralization. This we've seen with some protocols.
All right. Favorite Pokemon.
Ooh, probably Deoxys.
And last but not least, college education.
I think depending on what you do, it can be really useful. I don't think it's a necessity. I think it helps both socially and academically, and probably more socially, to prepare you to be able to solve a bunch of problems in the future. But I think the experience of going to college is really useful.
And I asked this last question to everyone. How much of your success was due to luck? If you could put a percentage on it, what would it be?
I tend to be pretty like fatalistic about some things. So I would say between like 20 and 40%. I think luck can be made in some senses. Maybe some people disagree.
I fully agree. I mean, I think luck is important, like meaning you probably have to luck out at some point, but you can definitely put yourself in a place where you get that extra exposure to luck. So making additional luck, I think that's the way to go. So with you, buddy, same page there. All right, man.
Yeah, we often joke that my job is to increase the surface area luck for Friktion.
That's a good way to put it. I will use that line. So all right, cool. We've pretty much reached the end. Did you have fun in the podcast today?
So yeah, this is really cool, man. I really like the way you designed it, and thank you for having us.
All right, man. Did it make you smile at any point?
It did, yeah. I'm still smiling, so yeah, I enjoyed it.
Perfect, man. All right, and who would you like to bring on or nominate to come on to our show next?
The first person I think would be Senex from Tulip, and I actually have another one in mind, but I'm checking for this person who's kind of in on right now that I can share afterwards. But I think the Tulip guys are really cool.
All right, well, link me up and we'll bring Tulip on. I'm super excited to get to know them. I heard a lot of good things about Tulip. I don't know much about it yet, so yeah.
Awesome, man.
Yeah, thank you so much. It was really fun. Yeah, super fun having you on. I appreciate you making the time and glad to finally catch you on the podcast and keep in touch.
Awesome. Looking forward to seeing the next ones.
Hey, people. I hope you enjoyed listening to our podcast. Our Solana Insights podcast is all about having real conversations. We talk to builders and users of Solana and make their stories available to all. To listen to more of our episodes, come find us on YouTube, Spotify, or Audius. And if you'd like to chat, hit us up on Reddit or Twitter. Solana Insights is a not-for-profit organization and is made possible by Player 2. Until next time, this is Moo, signing out.